Hello traders, in today's video we're going to be talking about locked-in range analysis, or LRA. Recently on Discord I got a question asked from Tiger about when do we know when price leaves a locked-in range, when price leaves consolidation. When do we know if price is going to trend higher, trend lower, stop loss on low, stop loss on high, and then go back to the range? How do we know what's going to happen next? And I've come together with a few examples and a few strategies that will hopefully be really your best ammunition to discern whether this is going to happen. Okay, so here's the first example. I want you guys to look here at open interest of Bitcoin, the long-short ratio on Binance Futures, and volume by side on Binance Futures as well. Now, what we see is price just left a locked-in range. You can see it was around the 37s, 38s, and it went a bit lower. Do you believe that this is a genuine downtrend where price will continue going lower? Or do you think that this is just going to be a stop loss on where price goes here and then goes back into the range? So there is a right answer for this, and I'll give you guys 5 seconds to try to discern what's going on here and what do you think is probably going to happen next. Okay, so the answer to it is price goes higher. This was a stop loss on. Really what's going on is open interest really falls by a fair amount, by about 100 million US dollars. So we go from about 5.97, 5.96 to about 8.97, 5.897. So we have a pretty sizable loss in open interest here. What we also see is that the long-short ratio goes a little bit lower, but the greatest sign, I think, that this was just a killing of a lot of the longs was this right here. About over 3,000 Bitcoin were market sold right on this candle right here. And this is a delta, which means that possibly there are actually even more than 3,000 Bitcoin market sold. Just the difference between market buys and market sells, there were 3,000 Bitcoin worth more of market sells on that 1 minute candle. That's just not sustainable. With an open interest drop and a large sell-off like this, typically price reverses because all the people who were going to get stopped out or liquidated have probably already had that happen. Now what we see happen is price goes a lot higher, and this is probably why, right in the middle. Now, next example. This one I like a fair amount too. So we have a locked-in range here, but I want you guys to focus on really what's going on here. Do you think that this is going to be the beginning of a downtrend? Or do you think this is going to be a repeat of the last picture where price does a stop loss on and then goes higher? I'll give you guys 5 seconds and then I will explain what's going on. So I think 5 seconds have passed. Open interest is falling consistently, but it's really not falling by that much. 6.14, 6.15 down to 6.12 billion. That's not that much of a drop in open interest. Additionally, the long-short ratio is rising as price is falling, indicating that more longs are entering and shorts are exiting. Finally, we don't really have a large sell-off. We have a moderate size sell-off, which means that there might be a lot more selling potential. If this was a massive sell-off like something like this, then that could be a sign that price might consolidate a range or go higher. But what ended up happening is that I took that picture right at where that cursor was, and you can just see price just fell a fair amount more. And really what to look out for in this example is how large is the sell-off, because if you see a massive sell-off with a price wick, sometimes price can go lower, but typically that does not always happen, especially if open interest drops off massively, which it did not here. Also, the long-short ratio is really showing us that we have some longs being trapped. Now, I got a question once, I think, also to answer another one at Discord. Why do I say when open interest rises in a consolidation phase? Why is that so important? This is what happens, guys, when price goes lower. When price goes lower after open interest, meaning a lot of positions opened in a range and then price goes a little bit lower, what ends up happening is we have a lot of new longs, a lot of new shorts. Now the shorts are in profit. They don't have to close their positions. They're not going to get liquidated. They're not going to get their stop loss hit. The longs, however, are in a completely different situation. Anyone who bought on leverage will have a liquidation price lower. And because of that, there is a price at which they will have to close their position or they will be forced closed, i.e. liquidation. So because the longs are, getting closer to a point where they have to close their position, the longs become fuel for a downtrend. And that's really why trends can occur sometimes. When price begins to fall, the shorts don't have to do anything, so they don't have to buy. They can just sit in their hands. There's not a lot of buying pressure, but the longs have to sell at some point, or just hold on. And because the longs have to sell when price goes a little bit lower and they're getting closer to their stop loss or to liquidations occurring, that creates a fair amount of selling pressure. And that is why the trend typically continues lower. And then you may say, well, then why does sometimes price quickly wick down, then go back up? Why doesn't it go lower? Well, that happens because if a lot of longs have already been forced out of their positions on that movement lower, then that creates enough fuel that basically taps out all the selling pressure is what I'm trying to say. And because it taps out all the selling pressure, price goes higher because of a lack of selling pressure. Now, what we see here is probably my favorite example so far. You get a locked in range here, BNB. Now, what we see is that open interest is the highest it's been since this entire locked in range, and the long short ratio is the lowest it's been. We also don't see a lot of buying here. I mean, we don't see a crazy amount of buying, we see moderate buying. So if I haven't given away yet, what do you think is going to happen next in this picture? You think price goes higher? Or do you guys think that this is just a gravitating towards short stop losses and price goes lower? So what happened here is price went a fair amount higher. Really, the reason that this occurs is first of all due to open interest. Open interest is rising with this up move, and it's also quite high. When open interest is quite high, that can be a sign that price is going to leave a locked in range. Because typically what happens is open interest will build in a locked in range, i.e. consolidation phase. And after that open interest continues to increase and build, you get to a point where a lot of people who wanted to open positions have already done so. And then price just begins to trend up or down away from that locked in range. And with so many positions on board, there's a lot of fuel, for the fire, for the trend to continue. Now, what we see here is that the amount of increase looked to be about anywhere from, I think, around $10 million. So about $10 million worth of new longs and new shorts have opened here. Now, what you need to think about is after price rises, how do you think those $10 million worth of shorts are feeling? The $10 million worth of shorts that opened in this range, they will have to close out their positions at some price higher or just risk liquidation. And because of that, that creates that buying fuel, that $10 million worth of buying fuel. But, of course, it's not a one-to-one ratio of traders who opened to traders who have to cover because there are a lot of different dynamics in markets like hedging. Everyone has a different liquidation price, of course. Everyone views the market differently, but it still is pretty important to look at the fuel of the market, i.e. the open interest. And you can see during this trend that it looks beyond healthy. Very, very healthy uptrend. Open interest consistently rising and the long-short ratio consistently dropping, indicating that more accounts are opening shorts and are closing their longs, which is a sign typically that retail traders are on the wrong side of the trade, which is a sign that the trend will probably continue. Because when many retail traders think that the market's going to fall while it's rising, lo and behold, they're shocked when it continues to rise, contrary to popular opinion. So I hope that answered some of the questions here that this guy had asked. Now, to really explain what these terms mean, what he's saying here, gravitation is when price hits a bunch of stop losses or liquidations and then goes back into the range. Resistance or support, when the locked in range converts or turns into resistance or support, that's when a trend emerges. So that's when something happens where price goes higher, like in that BNB example, and then that entire locked in range becomes a support level because anyone who had opened shorts in that area might want to exit at break even or slight profit, which creates a lot of buying potential in that locked in range, which is what support is. Support is just buying potential at a certain price. Now, is there a way to identify early sign that the locked in range will change? There is a 100% answer to that, and that is when open interest is getting very, very high, and specifically when open interest gets to its highest point throughout an entire locked in range. So an example of that is right here. You can see open interest got to its absolute highest point when price left the range. That's a sign that this is probably going to be a trend. Now, okay, let's see what else. How can we determine? Yeah, shift lower, which is distribution. Yeah, and what I would look at for that is the three indicators that I mentioned, which is open interest, the long-short ratio, and volume delta. Volume delta to just look at blow-off tops and blow-off bottoms where there's a fair amount of selling and then, you know, we think the price is probably going to rise, or just a crazy amount of buying. You need to look at that. Open interest to see how much fuel is there for the fire, and is price going to a place where people are closing positions or opening. And then finally, long-short ratio, where we're seeing are retail traders getting on the right side or the wrong side of a current emerging trend. Now let's look at a current example here. I do believe that the market is going to, I don't want to say it yet, but what do you guys think? Looking at what we had just talked about with locked in ranges, talking about trap traders, and really all that, do you think there's a greater probability that price just continues above 41, goes above the range and just trends? Or do you think price is going to fall? I think, personally, that price is more likely to rise. I'd say 70% chance that price rises above here instead of going down here, like this happening first. And the reason why I say that is, first let's talk about the price action. I see rising lows, which can indicate trap shorts at bottoms, which indicates that we're trapping them, and you know, typically when you trap shorts, you go higher. Also, what's happening is we have a fair amount of touches of resistance. So when you get a lot of touches at one point of resistance, like boom, 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 it weakens those resistance points. And it weakens it because all the selling pressure that was here, i.e. longs that were trapped. So any longs that were trapped here have had opportunities to mostly get out of their positions, which clears out a lot in the selling potential here and makes it easier for price to rise because of a lack of selling potential. Open interest is quite high, indicating that if we begin to trend higher, we will start to kill off some shorts unless open interest continues to rise while price rises, which is indicating that there are even more shorts opening. And to discern really how many positions have opened in this range, I can see that that's about, let's see how many million. That's about 500 million, God. So about $500 million worth of longs and shorts have opened. If price goes higher, those $500 million worth of shorts are going to have to close at some point. So a price move higher could put a ton of pressure on shorts, which could lead to a much higher move. Also, the long-short ratio is quite low. We can see that a lot of people are opening shorts, as you can see here, and a lot of people have been closing their longs. And a really important point was here, when the long-short ratio was at its very lowest, right here. That would have been a beautiful time to buy right there. Ooh, that would have been lovely. But right here, I think that this is more likely bullish. I think the only time where if price goes higher and it doesn't trend, we see something like price goes a little bit higher, creates a massive wick, high volatility, price spikes up. You see open interest tank. You see the volume delta, which is the bottom indicator, completely just like crazy amount of buying on a 5-minute candle or a 1-minute candle. And then you see the long-short ratio go higher. That would be a sign of many shorts getting killed and a sign that price is probably going to fall. So with this, pardon me, with this knowledge, I'm probably going to either buy a call option, use HXRO to bet on the market going higher, or enter into a futures position long, because I think it's more likely than not that price will rise. So I hope that this was helpful today, and I really liked the really detailed question on LRA that Tiger had asked. Additionally, I go a lot deeper into this entire subject in my course, my trader course that I will link below. You can learn a lot more than just what I talked about, and there's dozens of practice examples and lots of ways to help you in your trading. So with that, happy trading, and if you have any other questions about locked in range in LRA or about any topic in crypto, I'm more than happy to oblige. Just PM me on Discord. Happy trading.